Malaysia is known for having a large Muslim population, which is why it has the dual banking system, conventional and Islamic. Assalamualaikum and hi everyone. Today we're going to present about the Islamic banking system and concept in Malaysia. Our group member consists of me, myself, Nurnisa Farhana, Hani Adriana, Nur Alia Natasha, and Wan Ahmad Nadir. The first concept of Islamic banking system in Malaysia is ijarah. What is ijarah? Ijarah is a term of fake and product in Islamic banking or to give something on rent. According to Malaysian's Accounting Standard Board, ijarah is a concept used in Islamic commerce. Ijarah signify a contract where one party transfers the right to use an item he owns to another party for a specified period in exchange for an agreed consideration. In other words, ijarah is often called Islamic leasing. Ijarah concept is also mean a leasing agreement commonly used in Islamic finance, where the lessor, which is the owner of the asset, leases the asset to the lessee, which is the user, for a specified period and rental payment. Unlike conventional leasing, ijarah prohibits the charging of interest or riba. Islamic banks use ijarah to enable their customers to use durable goods and equipment such as ships, aircraft, heavy machines, plants, and vehicles. This way, the customers have a luxury to use these durable goods without having to buy them. An example of an ijara contract is an Islamic bank purchasing a house for a customer and adding management costs. The customer then pays a rental fee until the total cost has been paid off, at which point the ownership of the asset is transferred to the customer. So next part is presented by Tasha. What is musyarakah? Musyarakah is a partnership agreement in Islamic finance in which partners share in the profits and loss of a business. Musyarakah allows that partners distribute their profit on pre-agreed ratios, while each partner share the loss in proportion to their contribution. So let me give some example. Suppose that Ali wants to start a business, but he does not have enough funds. His friends margin on extra funds and want to be the financial in musyarakah with Ali. In this situation, the two people will agree on the terms and begin a business that allows them to share a portion of the profit and loss. This negates the need for Ali to take a loan from Majid. Okay, so next, musyarakah include different type of partnership agreement. In general, there are two types of musyarakah. The first one, syurkah al-milk. The joint ownership of the two or more people on the certain property is considered syurkah al-milk. The main feature of this partnership is to mix the ownership. It can be either optional or mandatory. For instance, in the event where two or more persons decide to buy the property jointly, they become owner of the asset at the same time. As they choose to purchase asset together by themselves, the partnership is established by choice. In the second category of syurkah al-milk, the partnership comes into existence naturally. So the second one, syurkah al-aqd. Syurkah al-aqd is the second type of agreement, a type of mutual contract. Partner in business transaction may use this type of contract. It is an agreement in which two or more people share their property, liabilities, or labors to make a profit. We divide syurkah al-aqd into three categories, which is syurkah ul-umwal, the partnership in capital, syurkah al-amal, partnership in labor, syurkah al-wujuh, partnership in credit. So that's all.
The third Islamic banking system and concept practiced in Malaysia is mudharabah. It means it operates within the broader framework of Sharia principles and is governed by regulatory authorities such as Bank Negara Malaysia (BNM) to ensure compliance. Mudharabah financing is a key concept in Islamic banking. Here's how it works. It involves two parties, Sahibul Mal, aka the bank, as the financier, and the Mudarib, aka the customer, as the entrepreneur. Profit sharing follows a ratio that has been prearranged in the contract. Utilized for various purposes such as business expansions, trade financing, and project financing. Islamic finance encourages risk sharing between the lender and the borrower. Mudorobah also aligns with Sharia concepts. It follows Islamic law, Sharia, which forbids paying or accepting interest, or in Islamic way, we call it as riba. It also practices ethical investing by staying away from sectors such as alcohol, gambling, and pork. Overall, mudorobah financing is a significant component of Islamic banking in Malaysia, reflecting the country's commitment to providing Sharia-compliant financial solutions to its Muslim population and promoting ethical and equitable financial practice. For example, in Mudorobah, Sarah has a great idea for a lemonade stand, but she needs money to get started. Alex agrees to provide the capital, but instead of a loan, they enter into a Mudorobah agreement. Sarah runs the stand, selling lemonade and managing everything day to day. Alex provides the funds and shares in the profits. They agree that Sarah gets 70% of the profits and Alex gets 30%. If the stand doesn't make money, Alex bears the loss. But Sarah don't owe anything beyond what was agreed upon. This arrangement motivates Sarah to work hard to make the lemonade stand successful, knowing that she will reap the majority of the rewards, while Alex shares in the profits without actively participating in the business.
Tax is presented by Hani. So, what is murabaha? Murabaha is an Islamic finance term that describes a sale in which the seller reveals the cost and profit margin to the buyer. The buyer agrees to acquire the item for the disclosed price plus an agreed on profit margin for the seller. The profit margin is usually a fixed amount or in a percentage. And it is different from riba because a murabaha contract is a sale involving the bank purchasing an asset and then selling it back to the client with a profit charge, not an interest charge. This transaction is considered halal and valid under Islamic Sharia. In a murabaha sale, the buyer may pay the total sale price directly or pay in installment. If the payment is made in installment, the total price is divided into equal installment, including the profit margin. And the intention of murabaha is to create a financial fund for business transaction. For example, buying non-current assets like buildings and machines. So this is an example situation for murabaha. A customer wants to buy a car that costs 10,000 ringgit and approaches the bank for the favor. The bank purchases the car for the customer and sells it back for 12,000 ringgit. The option to pay in installment. The 2,000 ringgit represent the profit margin, which is revealed to the customer beforehand. Overall, this Islamic financing contract serves the purpose of providing financing and investment opportunities to individuals and businesses in a Sharia compliant manner without involving interest or prohibited activities. They promote risk sharing, transparency, and ethical conduct in financial transactions. And that is all. Thank you.